Hi, my name's Romeo Caparasa. I'm from Tax Accounting Adelaide, and I'm here today to give you a bit of information to help you out and giving you a simple explanation of the tax system in Australia. I'm going to make it really simple and dumb it down for you so it's easy for you to understand, make it a little bit more interesting than it normally is on the Australian Tax Office website. A little bit about me. That's a picture of me just over there. I'm a member of this professional accounting body called National Institute of Accountants. I'm also a tax agent. I live in Adelaide but operate with clients throughout Australia. Okay, let's get started. Don't get scared of this word taxable income. That's this fancy word that the tax office uses for basically your income. And basically this is an important word because it just basically, you need to start from here. You need to start from income. So I'll give you some examples of income. Some simple examples of income are wages and salaries from your boss, and also some other income examples are interest, dividends, earnings from business, rental properties for instance. Now you need to take from income, which of course is money coming into you, deductions, which is money you've spent. Now some examples of deductions are the cost of preparing a tax return for a tax agent like me. Some others are donations, and also work related deductions such as buying a uniform for your boss, and also if you go out on site or trips to clients on behalf of your employer using your own car. So remembering, you don't actually claim from home to work, it's only business travel from your workplace to, for instance, clients. So that gives you basically a snapshot of income. So your income minus all these deductions. Now they're all listed on the Australian Tax Office website, but that gives you what the tax office called taxable income. Now taxable income is important because depending on how high your taxable income is, there's different basically rates that the tax office will impose tax on you. And to give you an idea, I've got the little rates here for the 2010-2011 tax year. So for instance, if you were on, say, if you quickly worked out you were on a taxable income of say 30,000 here, so between 6,000 to 37,000 you pay 15 cents or 15% for each dollar of above that 6,000. So that gives you a little idea of how to work out your current tax bracket. So this basically effectively means if your taxable income is say over that, and it's actually at let's say it's at 80,000, then your tax, the value of your tax deductions, which we mentioned earlier, will be 30% per dollar. So there you go, there's the 30% there. So you don't get the whole value of the deduction back, it's only your current taxable tax bracket. So for instance, in this case it would be 30%. So once you've got worked out your tax on your taxable income, you then need to take from that any tax you've already paid. So some examples of tax you've already paid are tax which your employer takes out of your wages or salary. You may also pay some pay-as-you-go installments to the tax office, or you may just simply want to pay extra tax to the tax office. You also take from this amount any tax offsets. Now tax offsets is an amount which you get 100% back depending on the circumstances on your tax refund or payable amount on your tax return. And some examples of tax offsets are, for instance, the credit which companies pay on your dividends if they've paid tax on your dividends already. Another example would be if you spent a lot of money on medical expenses over the year, you can claim what's called a medical expenses offset. And another example would be the education tax refund, which may apply to you if you have children in primary school or high school. I'm just going to give you some quick tips. I'd recommend you keep all the receipts you think may apply to your tax return and get your tax agent to check them out if in doubt, and he may be able to include those in as deductions for you. I recommend that if it's quite a complex tax return for you, to use a tax agent. So if it's out of your league, basically, I'd go to an expert tax agent and let them get you a lot better tax refund or tax return than you can do yourself. For the small cost of the tax agent preparation fee, you may be able to save yourself hundreds or even thousands of dollars by seeing a tax agent. And it's also your responsibility to keep your records, so your tax agent will diligently do your tax return, but it is up to you to keep your tax records for up to 7 years, and also provide him the correct information as well. Him or her, correct information I should say. There's plenty of lady tax agents out there, of course. There's more information on the great website www.ato.gov.au. Most of you have probably already seen it, but if you want more information on all the different types of income, all the different types of deductions, all the different types of tax amounts that you may pay during the year, and also all the different types of tax offsets that are available, and all the current tax rates on taxable income rates, you can check out the website www.ato.gov.au for more information. Or you can also check out my website at taxaccountingadelaide.com. We actually give you free templates for rental properties and businesses. So we give you basically a listing of all the different types of deductions and information you need to collate, and it's good to use these so you can give them to your tax agent, so you've summarised the information for him or her, and hopefully they'll charge you less because you're very organised. Or you can also visit our website at taxaccountingadelaide.com/online-tax, and you can actually have different methods of lodging your tax online with our website. Thank you for listening, and I hope we've helped you understand the basics of how your tax return works, and many happy tax returns.